Welcome everyone back. My name is Fausto Pugliese from Cyber Trade University, and welcome for a new podcast of cyber traders. And I'm very happy to have a new person here that we haven't in a while. We have Jason Bodner. I basically met him at the Money Show, and I did a podcast with him. I thought it was actually fabulous, and it was a fun webinar. Podcast that we did together. I says, you know what? I want him to come on the show and have him to listen to what he has to say. I love this product. I love what you had to mention. So, Jason, welcome to the Cyber Trader podcast. How you doing?
What a great ego puff up intro. Thanks for having me. Thanks for the compliments.
Well, listen, you know what? There's a lot of I hate the word influencers out there, but everybody thinks they're a guru in this world. You know what I mean? Everybody thinks they got a good platform out there. Listen, it's a very big business, but it's a small industry. And, you always want to surround yourself with people that have great content, and that's what people are here for, to listen to. But just to let you know, it's funny, but I met you and we did that podcast. It was nice. It was like almost like the Brady Bunch. It was like almost like six of us, going around talking back and forth about the markets. And it was great because you heard the negative, you heard the positive stuff on it. And, and that's why we're here. But why don't you tell us a little about you, Jason? Tell us a little about what you do and, what brings you into this industry? How'd you get into this industry?
Yeah, the second part of that question answered is a little crazier part than the first. To make it simple, we are quantitative stock analysts. We look at cold, hard data. It's a data science-based platform. We score and rank over 5,500 stocks daily using 120 data points and all these sub-algorithms. We look at fundamentals. We look at technicals. And our secret sauce is really looking for unusual money flows in and out of the market. As we can get into later, independent brokers estimate up to 90% of the volume on any given day is institutional. So if you're not paying attention to it, you're kind of missing the boat. So what we look for is when huge money flows are moving into the highest quality stocks and vice versa, money flows out of the weak ones. And what that's allowed us to do is build up about a 35-year data history, 11 of it live, where our picks win about 70% of the time. And
wow,
anybody knows, if you're playing a casino game, all you need is slightly better than 50%. So we have great odds. And how that translates to the world is, we have buy and hold guys like myself. We have mean reversion traders. We have day traders. They all use the data differently. But what they get is higher probability inputs to express their trades or investments. And so that's what we do at MoneyFlows. How I got into it is a wilder story. I was actually a professional musician. I was in a rock band to make my parents proud for paying for college. I rewarded them by moving to Colorado and being in a band. But after that didn't work out, I moved to New York. I wrote music for TV commercials and fashion shows. And after 9 months of work and composing a ballet that I conducted at Lincoln Center, I made $1,500 before taxes.
Wow.
So then I landed a job on a derivatives desk.
You were loaded.
Loaded, rolling in it in Manhattan, no less. And then I landed a job on a derivatives desk at Cantor Fitzgerald. And basically, just worked my way up to where I eventually ran derivatives in North America. I worked in London for 4 years. But those experiences were massively eye-opening.
When did you work at Cantor Fitzgerald? When did you work at Cantor Fitzgerald?
I actually went to work there July 1st of 2001. And I trained on the 104th floor of One World Trade on the U.S. equity derivatives desk. And then I was transferred to London. So I literally missed 9/11 by about 5 weeks. Tragically, all the people I worked with did not make it except for one. And I came back to the U.S. A week later and helped rebuild the department. Cantor lost 657 employees that day. And, we were down to like a skeleton crew of 40 people. So it was all hands on deck to rebuild it. And then I stayed with Cantor from then, 2001 till 2012.
Wow.
And then
You were there for a while.
Yeah, that's like a lifetime anywhere else. Let's put it that way.
Yeah, Jason, I never really had anybody here in a long time, other than I was also affected. I live here in New York. I'm still living here. Regarding about the 9/11, so I think some people don't realize what it is that we're in that building. But I would like, I don't know if you feel comfortable talking about it, but like I lost some friends also that were there at Camp Fitzgerald. I mean, that was obviously the main floor that got hit. But I mean, not only that, but not even working there. I have a lot of friends of mine that are firemen that lost. One person that was off that day was at Rescue One, that they lost their whole battalion. He was only one of very few survived because he had off that day. Otherwise he would have been my brother-in-law. So he was a captain there. Now, regarding about you coming back, I mean, like, would you have been there if at that time when that plane crashed?
Yeah.
Because I know we were literally like, when the plane crashed, was it 9:08 and people were just starting to get to work? You know what I mean? Like, the room wasn't full yet.
Well, Canner, especially derivatives world, we got to the desk at 7 a.m. So everybody had already had their breakfast, read their newspaper, talked to their clients here 2 hours into the day. I most certainly would have been there. And this is one of those, like, there was a movie, Sliding Doors, years ago, where it showed you different outcomes of life based on, how you answer a simple question, yes or no. And it's just one of those moments. I was living in an apartment in New York. The lease was coming due. The job offer was here. And they were like, yeah, we want you. You can either work in London or New York. I was like, well, my lease is coming up due here. If I'm going to go to London, I need to know. And they're like, well, if you come to London, you need a visa and it's complicated. We could have you in New York for like 6 months. And I was like, then I got a sublet. Like, you pick, you let me know. Right. They're like, fine, you come to London, you'll train in New York for a month. So unknowingly, I put my life in somebody else's decision, and it really would have worked out very differently, because 100% I would have been there that day. And we lost guys on the desk. There were brothers, brothers who worked together. I don't have to tell you, husbands, fathers. It was terrible thing.
And I live in here in a town called Manhasset, where most of the traders do live here.
Yeah,
because we have a direct route that goes from. I don't know if you're familiar with the town, but we're like, there's a train station. This is where, like, the most popular location where people live to get to the city. And it was pretty rough. But well, God bless that you're here. And I probably say that every day and stuff like that. And you probably learn a lot. But with that said, so you went from you went from Canada to Jeffries or something? Is that what you ended up doing?
Yes. So I started European equity derivatives. This is where I learned this eye-opening stuff that we're about to talk about. I spent 4 years doing that, and then I was asked to take over the North American equity derivatives business, which I ran for 7 years in New York. Canner's offices had obviously relocated at that point to Midtown, nice low floors. At the end of my tenure there, I had the opportunity. I was an introducing broker, so we weren't using the firm's capital to put up derivatives trades, and we can get it. That's in the weeds stuff. But basically, it's like a real estate broker. You introduce buyer and seller. You don't own the house. So then I went to Jeffries, where we actually owned the house, and we could use firm capital. And I spent 2 years doing that. And to be honest, I got kind of tired of the bags under my eyes and the pressure. And I moved to Florida and started this business, which is now MoneyFlows.
Well, I always tell everybody that, some of the best, gurus, some people like you, is we all had to work at a brokerage firm. I mean, I was a market maker myself on Wall Street. I worked at the NASDAQ. I was one of the original So's bandits. So,
I remember that book. I have it in my other room.
Yeah, Harvey Halkett. Yeah. And then I came out with a book called How to Beat Market Makers at Their Own Game. But it was, I always tell everybody, if you really want to learn from someone, you have to learn someone that was in the trenches. Like you're not going to learn someone to go to war who's a good video game player. You know what I mean? So, you want to talk to a general who's been there before. And that's like us. I mean, I use that metaphor. I try to explain it. But that's why I was very impressed about what you were going to show everybody, how you use your derivatives and your platform, because that's what Wall Street uses. That's how you found a niche. And what's crazy about it, Jason, is that when you start, it's not when you get into this business, you never, do what you started. You end up finding something like, oh my God, that's what I want to do. Because when I started, which everyone does in this industry, you start as a stockbroker and you hate it because you're just a glorified salesman,
Yeah.
And then, but I always found out, I'm like, who makes the most money? It's the trading department. You know what I mean? I'm like, damn, that guy's got all the time he wants and everything. So, and that's how I got here today. And I guess that's how you got to that. So you left Jeffries, and then you built the MoneyFlows. Is that what you came up with?
Yeah, we came up with the platform, but the incubation was really while I was still running derivatives at Cantor and eventually Jeffries. And I think there's a beauty about going to work on Wall Street, right? If you go to work in law, you're standing up for the downtrodden. If you're working in politics, there's all these other reasons. I really believe Wall Street is it may not be the nicest, but it's the most honest industry because everybody goes there to make money, right? That's why you show up. So that's why I went, and I really wanted to know what made stocks go up and down. And I ended up at a brokerage firm, and nothing against brokers. Brokers make money when they consummate trades and they take a commission, take a little snippet. So they don't care what makes stocks go up and down. They just want you to trade. So I learned that that wasn't giving me the information that I wanted. But what was so there was this little, I was really lucky. After 9/11, I came back to London, and my clerk job was gone. I was getting everybody coffee, making teas in London and getting abused. And that job was over, and they threw me in the deep end of the pool, and I just had to go find clients. And the most random thing happened. The biggest trader in Europe at the time thought all the brokers were trying to rip him off. And when I say broker, I was an institutional broker. So my clients were hedge funds, big banks, institutions, prop traders, pension funds, like the big money. This guy thought everybody was lying to his face. And he's like, give me your most junior, know-nothing guy. And I was that guy. So I ended up covering this guy, and he said, Jason, I want you to tell me every trade over 5 million euros that happens every day in every stock in Europe. I was like, huh? Like I would literally just have to be staring at screens all day. So I got to programming computers. This was around 2001. Programming computers to identify big trades. And all of a sudden I got this list of a subset of the whole market's volume, this little list of big trades. And I started to notice certain patterns, how they were executed, what happened after they were executed, what happened to the stock price 1, 3, 6 months. And it was very impactful and eye-opening. And it was the beginning of me understanding that big money is ultimately what moves markets. And they pay brokers like me to keep it quiet. And this is one last point. The eye-opening moment. One time we did a trade for a huge account, and the very next day I saw him on CNBC, and they were like, tell us about your Apple position. I think it was Carl Icahn. And he was grinning and laughing, and you saw the little price of Apple on the screen. It was like up 2.3%. You calculate the notional, it was billions of dollars. And he's laughing. But you know what he wasn't doing? He wasn't telling you when he was buying it or before he was planning on buying it. He told you after he bought it.
Right.
But
they all do that. Why would you tell them that you were in process?
That's right. Those types of mechanics, though, kind of tell you where you need to look to identify stocks that go up or stocks that go down with good probability. Otherwise, it's just kind of, 50-50. I don't like 50-50. I like much higher odds.
Yeah, it's like black or red. It's like 70% is a lot higher. So tell me a little bit about this the platform that you came up with. But before I show it, we're going to share it with you. Obviously, the really big news, which a lot of things are coming out. I don't know how it's affecting your business or you're implementing. How is AI getting into this? Are you getting involved? Because now people's like, what do I need you for? I could use these program trading algorithms that use AI.
Yeah. Well, I think we're using AI in a different way. First of all, MoneyFlows, the platform, is powered by something we call map signals. That's kind of the IP, the formulas, the math. And we say that's powered by quantitative intelligence. So it's not AI, it's QI. So what does that mean? Well, I was in a very unique position for years, more than a decade, 14 years on Wall Street, actually physically handling these large trades for huge clients. And I got to interview them. I didn't waste the opportunity. I asked each portfolio manager, hedge fund manager, execution trader, risk manager, prop trader, blah, blah, blah. How do you pick your stocks? How do you know what's going up? One guy was looking at sales and earnings growth, a guy like Louis Navalier, big growth manager. One guy was looking at volatility, a guy who ran a huge $6 billion volatility fund. One guy was looking at cash flow from operations. And I took all this stuff like a chef studying all the other chefs, and I put it in my recipe book, and I started writing formulas to identify good, medium, or bad. And I just created my own recipe. I threw out what I didn't like. I kept what I did. And the beauty is we use publicly available data. And there's a funny analogy a client once told me, and he's like, it's kind of like you and Gordon Ramsay go shopping at the same supermarket, but the results aren't going to come out the same, you know? Mm-hmm. So we use the same data that everybody else has, but looking at the world through this large money flows gives us an advantage. So what is the platform all about? There are two key statistics that I cite all the time that I think are really important. Maybe less important for a day trader, but more important for somebody who wants to find the next NVIDIA. You know, I personally was buying NVIDIA in 2017. I haven't sold it. It's a big winner. They're not all like that. But I think, as you well know, you need one big winner to pay for all your losers and then some sometimes.
Right.
But the key statistics are Morgan Stanley and JP Morgan independently reported that up to 90% of all daily volume is institutional every day on the stock exchange. And up to 70 to 90% of that is AI driven, to your point, algorithms, HFT. The second key point is that a professor, Hendrik Bessenbinder, wrote a paper asking, do stocks outperform treasury bills? And you ask anyone over the past 100 years since 1926, which did better, most people are going to say stocks. And it is true. But what he found is only 4% of stocks over 100 years accounted for 100% the net gain of stocks over treasuries.
Okay.
Which means, yeah, the market does great, but if you want to beat the market, you gotta fish in a very small pond. So what we built was something to do all of that for us while we sleep and identify huge money flow as an added bonus. So we get great stocks, money flows in. Those are the ones we pick, and that's what we do. Now,
let's bring that in. Let's see that, Jason. So that's what we're talking about, because I think everyone's probably really interested, want to see what this is all about, as in sharing it.
Sure. So hopefully you're looking at my screen, right?
Yeah, we can see it perfectly.
Okay, this blue line here is the SPY. That's the S&P tracking ETF. The amber line is our most popular indicator called the Big Money Index. And all this tells us is when money is flowing into a market or flowing out. You can think of it as the buyers have control over here, the sellers have control over here. When it goes red, it's usually overbought, and that can be a very prescient indicator when to lighten risk. And when it goes below the green, it's oversold. And the easiest way to show you this is to go back to COVID, because it's so, blindingly apparent. You'll look over here, our Big Money Index was overbought. We're out there telling our clients, hey, this is unsustainable. We think risk is going to come out of the market. And then all of a sudden we go oversold and we're saying, hey, it's here. I don't know why it's here, but it's here. And what do you see? You see the S&P rising. Money's flowing out, but the market's rising. And then all of a sudden we find out about a virus that's going to threaten us all and change our way of life. The markets collapse. We go oversold. So down here in the depths of despair, people are dying. Nothing looks good. We're out there saying, hey, our indicator is oversold. Selling is unsustainable. These are the stocks we think you should buy. We were right. We had a massive run and then money floods back into the market. And this cycle is observable time and time again. We go oversold, I'd say once every year and a half. It doesn't happen always. Super popular indicator. And another way to visualize what this looks like, let's see if we go to equity flows. Yeah, it'll take us back to the past year. What we do, you can't really see on a chart. Like if I take SPY away, you see the greens is unusual inflows every day. And the reds is unusual outflows. What we'll notice is, hey, this was disgusting over here. A lot of outflows, huge selling, unsustainable selling. When I pop the SPY back in, you'll see it lines up right with the trough. That's where we're saying, hey, this isn't going to last very long. I know it's unpopular. I know everybody thinks tariffs are going to ruin the world. But I think we're about to rally. And we put that out in our research. So what we are at heart is a research firm. We tell you about market pivot points like these. We can actually drill down on a per day basis and tell you which stocks are bought or sold on a given day. So actually yesterday, there were huge inflows into technology. And we can go ahead and actually show you exactly which stocks people were buying. And they're ranked highest quality to worst. So this is our overall score.
Jason, how you getting this data in there? I mean, where's this data? What's this data working off that it's giving you those signals?
Yeah, so that's sort of the beauty is we coded up algorithms years ago to look at what we think is an unusual inflow or outflow. And this came about because I handled a massive trade in which I accumulated 6% the float of a stock of a company. And I didn't know who I was buying for until the news hit the tape, a 13F filing that a massive fund manager took a material stake in ownership. So I realized that I could program algorithms to show me trades like that without having to be on the trading desk. And that is what you're seeing here. And it's probably much easier to see on a per stock basis. So if I go over here, and
well, one stock it looks like I own it now. I just bought it a couple of days ago. Could you bring up MSTR?
Oh yeah, it's that MicroStrategy.
Yeah, I mean, I think I got destroyed, but it's obviously.
Yeah. So this is sort of the difference. First of all, let's look at those signals that you were talking about. You can see here, money flows started flowing out in August, started flowing out in September. You had that little V-shaped recovery, and then it was just getting crushed. I'll come back to MSTR in a second, but we can go look at an actual individual ETF, the Grayscale Bitcoin ETF, and we're going to see
IBIT.
This BTC.
A BTC, okay.
Grayscale Bitcoin Mini Trust. It's a tracker, but I mean, very clearly here, let's just look at a 3-month chart. Yeah, you had these little bounces, but the downtrend was clear. And obviously Bitcoin has collapsed like 40%. I know it's painful for a lot of people. But what we're seeing, if we go back to MicroStrategy, is that affects obviously Mr. Saylor's stock. But what we look at is an overall score of 26 that is negative, a technical score very weak. These are all out of 100, and fundamental score of 33. Now, MicroStrategy is a little unusual in that we look at fundamentals. I look for 1 and 3 year sales growth, 1 and 3 year earnings growth, and profit margins. He's obviously just a huge Bitcoin bet, so we can't compare him to McDonald's. But I try and be agnostic to the market because out of 5,500 stocks, I probably only care about maybe 100 of them. So I'm looking for the best fundamentals. I'm looking for strong technicals. So right now, if anything, this is primed for a bounce, I think, like crypto in general, but the downtrend is clear. But you can see these signals, to your question, those are the money flow signals that we developed that help us give us an edge in determining.
Is it starting to make a turn now, or is it, how are you seeing it?
Well, this could be a dead cat bounce for more. What I personally believe, Fausto, is in November, it's supposed to be a seasonally strong period of year. And November is the strongest month of the year since 1990, with 74% of them being positive, with the average gain of the S&P 2.54%. That's a great stat, odds in our favor. We had a weak November, and in the 11th hour, week thin Thanksgiving week, we had a rally. But going into it, the first 3 weeks, we saw what I believe is a huge deleveraging in the crypto space. I think a lot of these people saw forced liquidations. They got hit. They had to meet margin calls, and they went and looked for liquidity in the best places they could find it, which are popular longs like NVIDIA and Meta. And that's when the narrative came out that the AI trade was out of steam and they were overspending. But lo and behold, to your point, hey, looks like it might make a turn. But if I go back over here and we look at the biggest sector flow of the last week, it's been technology. All of a sudden, when that deleveraging got out of the way and they beat up these stocks to take profits to pay for bad bets, which is my hypothesis, all of a sudden their money flows in, and you're seeing them buy up, high quality tech stocks for the first time, since November 10th, in almost a month.
So talk about tech stocks. I mean, what about Apple's got earnings coming out tonight, right?
Mm-hmm. Yeah.
So how does Apple's been having a great market? I mean, it's been doing phenomenal, break all-time highs. What's the score you got on that? 67?
So 67 is good. What you need to know about our scores is 70 to 85 is sort of the green zone. It's more like an RPM meter on your car, as opposed to, 100% is the best, like a school grade. 67 is just south of great, the sweet spot. Technically, it's very strong. Fundamentally, it's kind of middle of the road, because obviously it's no longer a massive growth company, and that's tends to be what I look for. You get all sorts of signal data up here, but what you can see, to your point, it's been on a great run. Outflows were last seen in April, and inflows. We look at the fundamentals. Again, I'm a growth guy, so it's got kind of flat growth, not very exciting. A huge profit margin, which is great. They're heavily levered. So in my personal opinion, there are better stocks out there. But how a day trader might use this data is sometimes potentially even mean reversion, right? You see a signal here, you might get a couple of days of, let's go back over here. You got a buy signal, massive volume moving in. What usually happens to stocks when that buyer steps away? You get a reversion, stocks come in a little bit, maybe it flatlines. The next leg up is another huge volume swell in. You can think of these green swells as like volume. So if you get a big buy here, short term, I would say we're probably going to dip a little bit. Obviously, earnings has much to do with that, but clearly the market is expecting great things from earnings. If anything, I would expect probably underwhelming. Even if they meet earnings and guidance is even slightly rosy, they might sell it to take a profit. That's sort of the short-term view. The long-term view, however, is money flows moving in. Typically, these billion-dollar funds and guys with massive research budgets and analysts and CEO calls and tech conferences and all the things that you and I don't have, they're typically not pouring tons of money into massive market cap stocks because they think they're going to go down. That's not short covering is what we're looking at. So longer term, I'm bullish on this stock. Obviously, everybody holds it. It's in every major index. It's a huge component of everything. But yeah, that's kind of two views from the same window, if you will.
So let's just show me, let's see one more before we tell everyone. And by the way, if anybody wants to see what Jason's going to be doing a workshop with CTU, if anyone's interested, I'm just going to post up a QR code right here. just take your phone. You could scan that QR code if you send by your computer, and we'll get you that link to come back and get his website and get his promotion for his event that's coming up. Show us a good one that you see that's got a very high score, and I like to see your heat map that you have on there that's kind of showing your indicator on that one.
Well, I'll do you one better, because you can go into daily flows, like I said, and see which stocks are being bought on any given day. So right now we're looking at technology, and it ranks them highest to worst. That said, there's a tab in here that's just top ranked equities. And what we do is we score 5,500 stocks every single day, and then we separate them into broad sector groups. So here we kind of mashed energy, materials, industrials, and utilities together. We can go in here and look at the highest ranked stocks. This isn't necessarily seeing inflows. We have a different report that layers the inflows in. That's called the Outlier 20. That comes out each week, and that's our strongest signal. But if we're just looking at great quality stocks, and let's say you guys are sector traders and you're in the industrial space, First Solar looks great to me. Why? Fundamental score 83.4, technically very strong, has an overall score of 81. Get a little description here of what they do. Sorry, say again.
Right, I'm going to look it up right now and see what it's look like it's doing. I'm looking at the intraday chart. As a day trader, it looks like it's been channeling between 230 and 275. It's been on a downtrend the past, since the beginning of December, which is only 3 days. But you're seeing it's got a high score of you think it's got a push on the uptrend. It's been overall since July. It's been great. It's been a 150. It's almost over $100.
Yeah, it's doubled since April lows.
April,
which is outperforming pretty much, a lot. It's definitely in the low single-digit percentiles of performers out there. But what I see is money flows in, and then, you got this reversion. So short-term traders love behavior like this, right?
Yeah.
Long-term traders love to see this. This over here is when it appeared on that top 20 report. So what we do is we take those high-ranked stocks, which I'll show you a couple of more before we move on, because I know I'm jumping around. We take those high-ranked stocks, and we see when we get this green signal on a highest-ranked stock, it appears on the 20 best of report each week. When you get frequent occurs like this, plus inflows in, I am highly confident that this stock is going to see 300 before 200. So the longer-term trend for me is up. Short-term trend may be right. We're in a short-term downtrend. We're in a pullback. We're in a consolidation period, a give back. But with stocks that have superior fundamentals, look at this: 1 year sales growth 27%, 3 year sales growth 14%, 1 year earnings growth 54%. The 3 year earnings growth is not optimal, negative, but it makes a profit margin of almost 31% with a 9% debt to equity ratio. So these fundamentals look really strong.
Wow, pretty cool.
On the technical side, we have great inflows, 52-week highs. We look at moving averages, 50, 100-day, 200 are stacked on top of each other. That indicates an uptrend. So you get all these metrics at your fingertips. Let's just give you a couple more top-ranked equities, because I don't want to leave.
Do one here, because let's look at Tesla really quick. The reason why I ask you that is because the banks, some of the banks were ripping this stock, so it's way, way, way overvalued.
So does Michael Burry, right? He thinks it's super overvalued.
He says super overvalued. At $400, they don't really qualify what they're making with their cars and stuff. But obviously, it's everything else. He's got the robots coming out, the autonomous driving, all that. I mean, I own one. I love it, but but they took the mandate away from them. But it looks like it didn't affect it too much. It's been pretty volatile though this past.
It has been volatile. We full disclosure, bought it back in April when everybody was beating up on it. Sometimes I will do value trades. Overall, I'm probably a trend follower. I buy into the trend. I like higher probabilities for the longer term hold. Again, I'm a buy and hold guy. But if we look at the score right off the bat, It's a little better than mediocre, but really what's pulling it down is the technical. And even in the technical, it's just in this sideways channel here overall. We saw big money flows moving in September. Nothing really happened since then. But what I will tell you is if we go over here and we look at every time it's been on the top 20 report, I can go down here and show you this stock since the very first time it was on the top 20 report is up 12,500%. Now, obviously for day traders, you're not sitting around waiting years and years and years, but this is what we're trying to do. Our ideal holding time is usually around 9 months for a buy and hold guy. Okay. For the short-term guys, they're looking for mean reversion signals. For the swing guys, they're looking for both, either trend breakouts or mean reversion stuff. So different people use it different ways. But yeah, I mean, I own this stock. I'm with you. I think it's an exceptional company, but I'm willing to tolerate volatility as we continue to get our payoff.
Does this work on ETFs like TSLL?
Yeah, let's check it out. And again, this is more for our advisors. We have advisors out there, wealth advisors. We have an ETF product here. You get to see the top ranked ETFs. I just clicked the wrong one here. So these are our top ranked ETFs right now. And we can filter for liquidity to show, ones that have sufficient institutional liquidity. Hello, there we go. Okay. So ARK is a high scoring one right now. And the reason these scores are lower than stocks is if I click into one, for instance, you just asked me what was it?
TSLL.
TSLL.
Yeah, that's Tesla's ETF 2X.
Oh, the 2X levered one. Okay, yeah. This is not going to be as interesting because the only component is Tesla, but we can see scores. Levered ETFs aren't great from a scoring perspective because of the leverage. Right. Okay. Go back in here and I'm just going to pull that ARK one for AOT growth. Let's just pick that. I don't know what it is. It scores pretty well. Technical score, fundamentals. What I can do is I can go down here and I can look at the constituents weight by weight. So 10.6 of this percent of this fund is NVIDIA. It's a very high ranking stock. AMD, you can go into the individual components and look at how their scores rank and what the money flows are doing. So like Toast, I know it's a very high quality fundamental company, but technically it's been beaten up. So if I was an options trader looking for a reversion trade, I'd probably be selling puts and buying calls maybe 6 months out here. So there are many different ways you can use this, but on the ETF side, not only can you get these top ranked ETFs, but you can also see the flow direction. So we had huge selling in November. Now we're starting to see little green shoots of buying. If I scroll down here, we can see the focus. Well, there are equity inflows in the past day. And by the way, you can change this time frame. Somebody was selling a fixed income. Not a lot of action here, not a lot of stuff to talk about. But if I go back and let's say look since November 15th, just for argument's sake, we can see a lot of equity outflows, tons. Wow. And tons of currency outflows. And those were the crypto space. That's part of how I know there was deleveraging, because it was also going on in the equity version of the crypto markets. And here you can see, where the flows in are, where the flows out. So this is a very useful tool to look at money flows overall and isolate. When you get a money flow signal, you want to be investing in the highest quality stocks or ETFs. You get an outflow, it's probably going to continue.
Well, Jason, that's amazing, man. I love that system. You got to get me a user. I got to play around with it, and I want everybody else here to get kind of now. Is there a fee for it? How does that work when you get the program? How does it work?
Yeah, so we basically have 3 tiers.
Okay.
The individual tier is more for the older school newsletter buyer. They get PDFs and they get very limited portal access. The pro level, which is really more of like for professional traders and even smaller money managers, they get full access to the portal, I think with the exception of the ETFs. The ETFs and the portfolio analysis tools is at our advisor level. So there are 3 different fee schedules for 3 different use cases. And, you know, you can always reach out to us and find out more information about how.
Yeah, we got the QR code up there. I know we're going to have you back here coming to do a workshop on it so everybody can learn a little bit more about it. But before we go, Jason, just regardless about everything else, overall, is there any last minute recommendations you can give traders that are listening in after all your experience of what you came up with and how you built the platform and what you see the future of this market, what's happening? Because, you know, a lot of people are getting a little nervous with the volatility, and some people like this president, they hate this president, they see what's going on with the market, the interest rates are not coming down. I mean, you know, for someone that's been around the block, what could you advise them? What could you recommend?
Well, I think, look, when I started out trading, I thought I was an expert. And I was trading the dollar-pound conversion rate because I was in London. I was making money in pounds and I had dollars in the States. That made me an expert, right?
Right.
I did swing trades for a month and I lost 19 out of 21 times.
Oh, my God.
I blew up my account, and it was so bad that my boss on the trading desk set up a side account 10 times the size of mine and was trading the opposite. So basically, I was just giving my paycheck to my boss and his PA. And what I learned was, for me, trading on emotion and getting inklings and getting the feelings in the knees betrayed me nearly every time. And I needed to focus on data. And I think that's a big thing as well, is so many people are focused on the news and what it does to the tape. And I totally get the importance of the short-term impact that has in day trading. But longer term, you know, I want to see, how am I going to make 7,000 times my money like I did in NVIDIA, or 500x on a stock? I got to buy and hold that. I got to ignore the noise, and I got to focus on the fundamentals. You know, is the company healthy? Technically, is there good institutional support? And lastly, are we seeing inflows lifting that up? And that really lifts our odds. So right now, what that's telling me is there was a deleveraging in November. Tech stocks got hit. In the past few days, tech stocks are getting scooped up. I see opportunity in semiconductors. It's been a beat up space recently.
Okay.
Sales and earnings are working. Third quarter earnings were some of the best we've seen in 4 years. 81% of companies beat sales, 76% beat revenues. That trend is continuing. We have lower taxes, lower rates likely coming. So all the noise, if you're able to sort of pull the veil, the picture still looks pretty good. The one warning sign I would say is, we just did a study that, you know, second year of a presidency, midterms tends to be the weakest for equity markets. Well, first and third quarter are kind of weak, second are kind of flat, and the fourth quarter tends to be very strong.
Okay.
But historical averages aren't always the case, but it's something to keep an eye on. But I like tech. I like growth. I think it's been sort of under allocated on the small and mid cap side for the next year. And I think there's a lot of opportunity there.
So you still think it's undervalued? So at the program that you're having, and you're looking at it, you're still seeing there's still opportunities. The only issue I have with that is some of the stuff's still expensive.
It is. It can be expensive on a PE ratio basis, but I do point out, PE ratios can fall 2 ways, right? The price can collapse to give you a PE ratio that comes back to earth, so to speak, or earnings can grow and the price can stay the same and the PE ratio can collapse, or the price can even rise and the earnings growing faster. And what we're seeing, again, 81% of company beat earnings, 76% beat sales estimates. And the growth metric, while on a present value basis might seem inflated, on a future basis, oftentimes these PE ratios on a future are lower and they have a path to growth, and they're being even unestimated. And I think that's how we got some of these huge valuations anyway. Money's flowing in because it was underpriced, even though widespread people thinking, hey, it's expensive. And, there's always risk, but what we've seen historically is a lot of these companies with high valuations, they can get higher or they can grow into their own without sacrificing, price appreciation or depreciation for that matter.
I think everybody's just trying to find the next NVIDIA, you know what I mean? And that's the problem out there. Like, but I totally agree. I think some of them still undervalued. And I always tell everybody, listen, they're going to go on sale. It's a market gets hit. You had a sale that happened with COVID, but that's a long time ago now. But you had a sale that was right around on Liberation Day, which is on April. I mean, so when those opportunities do come, and they will come again, just be ready for it and just be in cash. So, really,
but they never feel like opportunity, right? They feel scary and disgusting, and you want to puke when you open your account. But that is usually the opportunity.
You know what, Jason, we wouldn't be here today if there wasn't opportunities every day. So that's why we love what we do. But thanks for coming, Jason. I really appreciate it. And everyone here, take your phone, scan the QR code. We'll post up the link how to get to his website, and he'll get you a demo and everything else. We're looking forward to having you back here on that workshop. So if anyone wants to register, please scan that QR code, and we'll have him at our Cyber Expo. Jason, it was great to seeing you. I look forward to seeing you in person, and we definitely got to have you back.
Great seeing you. Sorry about the sun washing me out here, but
oh, thanks. Appreciate it. I'm over here with the freezing cold in New York. So at least you were the smart one. You just left. I just got back there down in Miami. Let me tell you, I'm this close to getting there. Just but one last thing. Are you a native New Yorker, or did you that's why I forgot to ask you that. You said you're in the city. But where were you? Richard, you lived the city your whole life, or you came from somewhere else?
I'm a poser. I was born in North Miami Beach, but I left when I was 2 years old. I moved up and down the East Coast. I actually went to high school in Essex County, New Jersey, so just out of Manhattan. And I didn't really come to New York City until after I was in that band, and I came to write music in the city and be a successful musician there. But I moved there around 2001. I was there for solid 14 years or so.
You still jamming?
I still jam. I got the guitar in the back. I don't know if you can see it. I got my music books, Led Zeppelin.
I see that. I had a student of mine. I trained him, and he thanked me so much. He actually was from Netherlands, and he was one of the vice presidents of the Netherlands for Gibson guitar.
No way.
So he bailed. He as a gift. I can't play. I don't know what it is. I can probably have to end up selling it. But he sent me a Hummingbird limited edition guitar.
Oh yeah, those are beautiful.
It is. It's the most beautiful thing I've ever seen. It's in a coffin that's purple inside and everything. But I'm not going to do with it. But he goes, just have it. I'm just going to give you it as a gift, as a thank you. So maybe you could tell me what I could do with it. But who wants
you could sell it for a lot of money for sure. And you can definitely give me the guy's number.
Well, thanks a lot, Jason. And like I said, we'll get those shorts out for everyone. Jason, thanks for being here. Everyone, thanks for being here. And we'll see you back next week for another episode of Cyber Traders.
Thanks so much for having me. Talk to you next time.